back to Cash and Cocktails. My name is Imani, and I'm so glad that you are joining me again tonight. Tonight, we are going to switch topics a little bit and talk about tax planning. All of my clients out there listening, you already know. You've been hearing it from me all year, every year. Tax planning, tax planning, tax planning. Why is this important? Well, because after January, there's nothing you can do to change what you're going to owe in taxes, what you can deduct, etc. So you have to make sure that before December 31st, you have all your ducks in a row. Today, I'm going to talk about a few topics that I've been hearing some misinformation about, and I just want to give some clarification to all of you guys. But as usual, we are going to start with a drink. So today, we're going to be making a cucumber gimlet with Graywell gin. And it's a really, really simple recipe. I am very happy to have today some fresh pressed lemonade from my favorite girl, Bree, Miss Breezy at True Star Bartending. She makes the best pressed juices and bottled cocktails you will ever have in your life, okay? Everything fresh, Carolina fresh fruits, amazing stuff, okay? I'm going to tag her too so you guys can check out her juices and stuff. But today we're going to use her lemonade. Of course, if you don't have this, any natural lemonade will do. Simply Lemonade, Publix lemonade. As long as it's not off the dry shelf, it's good to go, okay? I'm going to use regular honey as sweetener. This is all natural honey too. You can get this from like any Whole Food store, probably even the regular grocery store. And if you're in the Southeast, you know, in the side of the road on a food stand. But natural honey is awesome. So make sure you get some. Of course, you're going to need a cucumber and a lemon just for garnish. You don't, unless you're going to make your own juice, you're not going to need a lot of lemon and definitely not more than one cucumber, okay? So as always, we start with our alcohol. We're going to do a 2-ounce pour. So that's a 4-second count. Okay, then add a little ice. I like a lot because I want it to be cold. If you are using fresh juice, make sure you shake because everything, all the good stuff will seep to the bottom. You're just going to pour it over that. Now you got yourself a real nice gin and juice, okay? Now, for a little extra flavoring, we're going to use some cucumber slices. If you are a big fan of cucumber flavor, you can muddle or squish up your cucumbers in the bottom of the glass before you start making the drink. As we all know, cucumber flavor is really, really powerful. It's really strong and potent. And I do like cucumber, but I don't want it to overpower my drink. So I'm just going to use a couple slices. And I'm also going to use some skin off the cucumber. If I was making this at work, I would have put this in first, just to make the sides look prettier, but I don't want a lot of cucumber in there, like I said. So I'm just going to drop one piece of the peeling in there. The skin on the peeling is just really, 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 really potent cucumber juice, okay? So if you put a couple of these in there and a couple cucumber slices, you'll definitely feel the flavor. You can also use like a cocktail pick and just take a slice, fold it up like so. Can y'all see that? And then stick your pick through it. Spread it out just a little. And you can put it across the top for a nice pretty garnish. You can put it inside a little bit if you want to. But it just makes for a nice garnish on top of the flavor that's inside the skin. So cucumber, another really fresh, natural cocktail enhancer. You guys know I always want to give you guys the freshest ingredients possible, whenever possible, so that you guys can enjoy your alcohol but keep yourselves healthy, okay? Then before we garnish, we're going to add some of this natural honey. Some people, like if you're going to make a bee's knees, traditionally will put the honey in first, have that at the bottom, and then you stir it in. I'm going to put this on the top because I like the way it seeps through the ice as the ice is kind of melting into the drink. So it's probably not as pretty as putting it in the bottom, but in my opinion, it tastes better. And after a few minutes, it's going to sink to the bottom anyway. I'm going to put this here so you can see how it works. See, the honey's all going to the bottom anyway, but the ice tends to hold some of that flavor in the middle for you so it stays consistent, okay? And I'm just going to grab another pick so I can stir because my stirrers are behind me. But I wanted to do a quick drink tonight so that we could really get into the topics, okay? So the first thing I want to talk to you guys about is third-party 1099s, okay? So what the heck is a 1099? A 1099 is a form that you get from the IRS. I'm sorry, from your employer or your contractor specifically, that basically just details how much money that you've made within the year's period. So it's not like, it's kind of like a W-2, but not necessarily. It's a basic report of income. So you can get a 1099 for various things. Today we're going to talk about 1099K, which is going to come from third-party banking apps, if you will. So specifically, I want to talk to you guys about PayPal, Cash App, Venmo, and Zelle, okay? So I know you probably have heard, or you heard from me or in one of my videos, that starting next tax year, you guys that use these third-party apps are going to be issued 1099Ks for transactions amounts over $600. So anything, once you have gone over $599, it doesn't matter if it's for one transaction or 1,000 transactions. Once you've hit that $600 mark, then you can be taxed on that income. Now, of course, there are caveats to that. We're going to talk about a few of them, not all of them, but some of them. But I want you to just get a good solid takeaway and be mindful of what you're using and what you're using it for, okay? So if you're using these third parties, like I said, once you've hit the 600 threshold, you're probably going to receive a 1099K, okay? Now, if it's a family member to family member type of thing, if your friend is reimbursing you for something you bought, those things are not necessarily taxable because they're not profits, okay? So the only thing we're talking about here are what could be considered as revenue or profit, okay? The issue with that is that third-party apps do not always necessarily designate what is a revenue transaction, what is a peer-to-peer transaction. So if you've been watching my videos, if you've been kind of in the mix and all this in the last couple of years, you'll know that I've suggested to some of you to get like a Cash App for business, keep it separate from your personal, PayPal for business, Venmo for business, etc. For this particular reason, because it's okay if you're going to have to basically have a tax bill for your third party use, as long as it is for something you're making profits on. Why? Because you had to spend money to make those profits. So even if, for instance, you had you were reselling tickets, like say you got some Beyonce tickets, you couldn't go or you didn't want to go or you just found it as an opportunity to make a hustle. So you bought the Beyonce tickets for $500, you sold them for $1,000. The person who sent you the money sends you the $1,000, and then basically you make a $500 profit. Your $500 profit is what you're expected to pay taxes on. So essentially, if you got the 1099K for that $1,000 Cash App that he or she sent you, you would claim the $500 deduction that you used to pay for the tickets, and then you would basically pay taxes on the other $500. So that's how it works. Now, you can file basically anything that you want. So what I want you to be concerned with is the future, especially if you're a higher earner or you are a high risk return. Be mindful of the fact that you can be audited years after you file this return. So say, for instance, you get the 1099K and, you basically, in your mind, you're like, oh, I'm just going to tell them that It was all friends and family, and that's it, and whatever. Okay, that might work, but more than likely, if you get audited, you will have absolutely no backup, no receipts, no paperwork, no anything to demonstrate that this was peer-to-peer interactions. This brings me to the next point. The third-party apps all have their way inside of the app for you to designate what payments are for. It's the same way as like if you write a check, there's a memo line. Anytime you send somebody a Cash App, Venmo, etc., it's going to ask you what it's for. The difference in the platforms is how they do it, okay? Zelle goes bank to bank. So Zelle is not considered third party. Zelle never holds your money. You can't have a Zelle account. You can't have a Zelle card, okay? Zelle only works when it's attached from one bank account going to the next bank account, all right? So Cash App, PayPal, Venmo work a little bit differently. Those are independent accounts. So when someone sends you money to those accounts, it stays there unless you choose for it to be put into your bank account. That's why it's called a third party, because it's bank, and then a third party. Okay? So what's happening at this point now is that once you use these third parties and they do or don't have a way for you to designate, then it's kind of up to you to make the designation and keep track of that. So in Cash App, for example, you can send money to anybody anytime. It'll have a 4-line. You don't have to put anything in it. You can put emojis in it. You can put whatever you want to put in it. But it is there so that you do have an opportunity to designate what the money is for. That is for your own record keeping, so that if there's any question about this purchase, whether it be for the IRS or legal reasons or for whatever, that's what that is for, so that you can designate what those monies are for. Venmo is very, very similar, except Venmo will not allow you to send the money if there's nothing in the 4-line. You have to put something, even if it's a smiley face. They do have a way to make you put in a designation of some sort before you actually send the money. Now, it's up to you whether you do that properly or not, but that's kind of how that works. PayPal, in my opinion, is the most specific. Anytime you get ready to send money on PayPal, it asks you very specifically, is this for friends and family? Is this a business transaction? That's not only for tax purposes, it is also for legal purposes, because your purchase is somewhat insured if you're supposed to be paying your monies to a business. And the opposite, if businesses are sending money to you, if individuals are sending money to you, there should be a designation on what they're sending the money for, what service or product, etc. So if you're a hairstylist, for example, you want to, if someone's Cash Apping you for your services, if it's a deposit, it should be labeled as such. If they're getting a specific type of hairdo, it should be labeled as such and dated as such. Okay, this is for your own tax records, because if you want to be able to claim those maximized deductions, you have to be able to show that you are doing business with those revenues. Okay, the 1099Ks are going to be issued over 600. Okay, unless these third-party apps, which they have not announced, have some way that they can designate from one way to the other how they're going to establish what your transactions are for. You need to be prepared in every transaction. This is a brand new rollout. It's never been done before. The IRS is catching a lot of flack from Congress because people are really concerned about how this is supposed to work. But on the flip side, Congress is saying, hey, a lot of taxable income is being held in those third-party apps, and those taxes need to be paid to the government. It's post-pandemic, y'all, and they want that money back. All that scam money, they want the money back. Okay, so this is an easy way to make a big clean sweep. However, there are going to be some adjustments over the next few years on how this works. So I want everybody to make sure you are prepared, especially if you do a lot of business or transactions through Cash App, Venmo, or PayPal. If any of this is confusing or concerning to you, feel free to inbox me, email me, call me, or text me. I'll be happy to assist you and make sure that you are in the best situation possible before the end of the year. After the end of the year, there's nothing I can do to help you for this year. Okay, guys? It's signed, sealed, and delivered at that point. I'm going to also, in the comments, put in an app you guys can use to start tracking all of your transactions, not just these third-party apps, but all of your transactions, so that when it's time to file, you're ready and you're not spending extra money. Speaking of extra money, if you're using these third-party apps and you're going to get a 1099K, please be prepared to pay more money for tax preparation. That's not a my rule or just for my company. That's going to be across the board. Because once you have a 1099K, whether you consider yourself or not, the IRS considers you a small business. At which point you're going to have to file a Schedule C, and then adding additional schedules to your tax return is going to increase the fee of processing your tax return. So the free TurboTax is not going to work for you. The $50 TurboTax is not going to work for you because you're going to have to file TurboTax Business, which is going to cost you at least an extra $50 or $60. That's just one platform, one example, okay? So just, again, be mindful, especially when you are free-flowing using these third-party apps, that this is what you can expect. And it may be better, it may be worse going into next year, because as this tax year progresses, and people either they're going to start to get a lot of money or they're going to start to get a lot of flack, or both. And then it's going to be a matter of weighing which one is more important and which one isn't, okay? So for you just need to be prepared for anything, okay? Moving on, we're going to talk about child tax credit. I saw, even just today, I saw this video that said on YouTube that said that next year's tax credit, the child tax credit, was going back to what it was for 2021, the $3,000 and the $3,600. That's false. That is not true. The video had 19,000 views, which is super concerning to me because that's a lot of people that's walking around right now with bad information. If you're the type of person that catches pieces of the news or clips and stuff on Twitter and Facebook, what you may have seen is congressional discussions about the child tax credit for 2024, which is not the tax season we're going into. The tax season we're going into, you're going to be filing for the year 2023. The monies that you made this year that we're in right now. The stuff that they're talking about now is going to be implemented for the next tax season, and they still haven't even made any final decisions. I always tell you guys, don't trust anybody's information but your own. You can go easily to irs.gov and see for yourself what the child tax credit rates are, okay? $2,000 per child. If you make over $200,000, you are going to reduce the credit by $50 for every $1,000 that you make. So if you made $201,000, they're going to take $50 off that $2,000 credit, and so on and so forth. If you have a tax liability, that means once your regular filing is done, if you're supposed to owe, only $1,600 of that $2,000 is refundable. So if you were supposed to owe the IRS $1,000, they're not going to credit you $1,000 and then give you another $1,000 because you got $2,000 in child tax credit. They're going to credit you $1,000 and give you $600 because only $1,600 is refundable. That doesn't really apply to every single person, so I don't want you to get hung up on that refundable, not refundable. We'll talk about that in another video another time. But key point to this part is anything you see or hear, even from me, go check it out on irs.gov. If it doesn't have a .gov on the end of the website, I don't care how many views they got on YouTube, go see for yourself. Because what happens is people gather all this bad information and they come to my office, they go to my preparers, they go to my EROs, they go to my friends, they go to their own preparers, they go to Walmart, Jackson Hewitt, they go to all these places and they raise holy hell because they are somehow the tax expert because they watched a piece of somebody's video that says that they're supposed to get $3,600 per child. No, $2,000. Check the IRS. They'll tell you the same. Now, for you guys that are like me, or maybe even not like me, but you're investing. You're investors, my investing people, okay? I want to talk to you a little bit about real estate investments and your taxes. Why it is a good thing. Long story short, if you have a rental property or an Airbnb, there are massive deductions wrapped up in that. On top of that, you have depreciation. Depreciation is really where you're going to make your money as a real estate investor. Especially in this market, mortgage rates are crazy high. That's why rent is crazy high. So the rent that you make is probably not going to be a lot more than your mortgage. I've even heard cases where people are charging less than the mortgage for rent. Why is this? Because owning and operating that rental property passively, essentially, is saving them from paying so much money to the IRS. It's also investing in themselves and giving longevity to their family by having something to pass on to heirs. So, you guys out here that have these Airbnbs and rental properties, I love you. Keep doing that. Remember to track properly all of your maintenance, anything that you're paying for property management. If you're paying third-party apps like Airbnb or VRBO, any repairs and stuff like that, any loan interest that you have, property taxes on the property, and again, tracking depreciation of the things that you buy. We were, up until this year, able to do 100% depreciation on business assets. Now we're at a bonus depreciation of 80%. So if you guys remember that video I made last year, it was like, you buy it this year, you claim the whole thing this year, you're good to go square. That's not the case anymore, okay? 80% is what you can depreciate now. 80% of the asset is what we can depreciate, not the entire thing, okay? So what does that mean for you as a homeowner? The assets that you put into the home that are basically essentially part of the house can be depreciated over time. The IRS basically says that the value of your house will depreciate over 27.5 years. Obviously, things in the house have to be repaired, updated, changed, etc. in that amount of time. So even though you're having to spend money to maintain the home, the continued depreciation of the home is going to be a massive credit to your taxable income, which is what keeps you from spending your money, or paying your money, I should say, to the IRS. It doesn't necessarily keep it in your pocket per se, but it does keep it in your investment. It keeps it in your future holdings, and it does continue to give you an opportunity to increase your revenue, expand possibly your business, possibly buy more rental properties, whatever it is that you want to do. Instead of you having to put money into IRS debt, you're able to then transfer some of that money into future goals, hopefully into a passive businesses of some sort, so that you're continuing to generate revenue for the future, for retirement, etc. So we want your taxes to work for you guys. Rich people really don't pay a lot of taxes, and it's for simple things like I'm talking to you about right now, okay? Knowing the right information, tax planning, knowing before January what's coming in and what's going out, recognizing the things that you're doing that may be an actual business. That's really important too. I know a lot of you guys, like, you have side hustles because that's what you have to have nowadays. Like, money's so tight, inflation is so crazy, everybody's trying to find a way to make money, baking, cooking, doing hair, fixing cars, cutting grass, whatever. Those are businesses, and it's costing you money to operate them. So I know hiding the income seems like it's a good thing to do, or since it's a cash business, we just won't tell the IRS. But it doesn't matter how you make your money. It doesn't even matter if it's legal. Once you make $1, that's earned income. The IRS is owed a piece, okay? What we do as good preparers, as good tax strategists, as good agents, are to make sure that you guys understand and know what your rights and responsibilities are. After that, the world is yours, okay? So please remember, child tax credit, $2,000. Transactions over $600 and third-party apps are subject to receive a 1099-K. Please make sure you get me your questions about that before the year is out so we can try to get you squared away. And if you have rental properties, make sure you have all of your transactions for maintenance, repairs, interest, etc. all together before the end of the year. If you don't have them, start requesting them. Even if you had like a neighbor or something fix something for you, gave them $50, you make sure you have something. Because audits are coming, they're coming hard, they're coming fast, and they're coming for small businesses, guys. So just do yourself a favor. Like I said, I'm going to drop an app in here for you guys to use. If you guys still want to use the shoebox method and throw all your receipts in a box, that's fine, but just expect to pay a whole lot more money when it's time to file and be prepared for a lot more aggravation, okay? I love you all so, so much. I wish you all the best rest of this year. I will see you next week with another episode, and enjoy.